Hi, Steamy, Kim Winfield, thank you so much. Yeah, Natasha, hi. Hello, I am Aid. It's nice to have you on board. Wow, yes, it's very mucky. It's sticky in Bath. Hello from
Yeah.
Accra. Wow, that's one of our first, international people. So, Andy, it's just a pleasure to have you from Accra. Marcus, if you wanna read a couple as well.
Sure, we've just heard Louisa saying, hello, the heavens have just opened in East London. Yeah, well, in West London, it was a very brief shower. I just had to shut all the doors, but it's somewhat stopped now. It's just hot and muggy here, waiting for the cloudburst to come.
Uh, yeah, it's pouring here in Surrey. Hello from Hastings, says
Oh,
Davina and Helen. Hello, wet in Shropshire, Helen. Sunny here, but not as hot as yesterday. Hazel, I'm totally with you.
yeah.
I think we've given enough time for people to join. We'll
We've
kick
done the
off.
British classic talking about the weather before we start as well.
Yeah, and Claire, just a final one. Nice temperature here in Cambridge, but I've been running to and from the garage today with buckets, battling against floodwater coming
Oh
in.
no.
Bloody hell. Right. With that and thinking about Hazel, I hope the floodwater is not too bad, yeah, for you. We're going to kick off. Welcome to the webinar today, and it's interesting. Somebody said from an Age UK, we would like to talk about management information. We'd like somebody to talk about budgets, budgeting, reforecast. Do you think you could do that? And so that's why we put this webinar on today. And we've had 170 people sign up, which is just exceptional. So Marcus and myself have worked hard to actually give you answers to these questions, but we hope it cuts the mustard. We hope it does what you want. Any other questions during it, please put them in the chat box. We're going to
Yep.
talk through it. We've got a couple of polls. We're going to open it up so that people can actually talk online. We're going to try and do this in a bit of an interactive way. So Marcus, do you want to
Yeah.
quickly introduce yourself?
Sure. And I was quickly going to say as well, challenge us. If
Mm,
we say
mm.
things that you don't agree with or you would do things differently, let us know. And this is a chance to have a discussion as much as it is for us to be talking at you for the next hour. So to give a brief introduction to myself, then I am Marcus Lees-Millay. I am the manager of the finance team at Moore Kingston Smith, where I have been since January. Prior to that, I was at Cass Business School doing the same sort of thing with Mark as well. All things charity finance, whether that be finance function reviews, business modeling, cost recovery, that sort of thing. And so it's a pleasure to be here with you today.
Thank you. So COVID-19, and the environment we find ourselves in at the moment, being accountable with our money is really, really important. Yeah. But I think if we get back to the basics of what is budgeting and what does actual versus budget really mean, I think it's quite an interesting conversation. So Marcus and myself are going to play that out as a bit of a role play. People often ask us, how often do we do reforecast? When should we produce management information? Well, we're going to talk about all of that. Yeah? And then we're going to talk about fast close. In other words, we're going to talk about how do we get the right information? How do we get good enough information to take decisions? Yeah. And we're going to take that in the webinar. That's what we're going to talk about. Two quick slides on Moore Kingston Smith. The first is MKS Fundraising and Management. This is the team that I lead. We've got three different components of it: an impact group, fundraising group, and also Marcus and myself on finance. And the impact group are social SROI practitioners, so they really can help you think through the impact model. Dan and Emma, they're fundraising experts. They've actually been, for example, fundraising directors and managers in their past before, so they can really help you with that. We're doing, on the next slide, Marcus, we're doing this information. Oh, we've got that at the end, sorry. Forgive
Yep.
me, I thought that the slides were in a slightly different order. So let's take a step back and let's think about financial management information. And I'm just going to start with a simple 101. Yeah, so I'm going to start with, what should your management information look like? This is going to be very simple. Then we're going to hopefully throw you a devious question. So if you give me the next slide, Marcus, what does good financial management information look like? It's got to be relevant. It's got to tell you the things you need to know. Yeah, it's got to show you, for example, actual versus budget. If something's changed, maybe it's got to have a reforecast. You know, it's also got to be relevant enough so you can see if you're making a surplus or a loss, you know, or if you're actually putting money into reserves and how you're using your reserves, for example. It's got to be accurate enough. It doesn't have to be totally, you know, to the pence and the pound, but it has to be accurate enough to start to think through the implications. The third one down, it's got to provide an explanation as well as data. I mean, I love graphs. Give me a picture, I'm happy as Larry. I really love graphs to be able to tell a story, but the narrative that goes along with this is the chance for the operational teams, the fundraisers, to tell the story of the numbers, to bring it alive. Yeah, it's got to be forward-looking. It's no point, if you like, looking at last year when this year we're in a COVID-19 environment. We've got to be looking forward at what's coming down the road. And as Marcus likes to say, you've got to actually, you know, look through the front windscreen. You can't drive through the rear windscreen, you know, otherwise you won't see the cliff coming up. We should include cash flow, not just cash balances. It's got to be easy to read and understand for the users. And what I find quite often is that finance will put forward something that they think works, but it just really doesn't work for the operational or fundraising team. And, you know, getting something that works from both sides is really important. And then we're going to talk about this, the final one, it arrives on a timely basis. Now, anybody who has worked in, for example, turnaround or, you know, financial stress will tell you the biggest indicator of an organization failing is that they just don't produce management information, financial management information. Yeah. So if your organization is not producing financial management information, you've got to be asking why. And, you know, I'm talking to a lot of organizations that have furloughed finance staff. They're 5-6 months behind. It's going to be a huge amount of catch up. I don't underestimate that. Okay, so here's my question for you. Yeah, this is what good financial management information and what it looks like. Why do we have good financial, or why do we have financial management information? So if you could just type into the web chat, please. Yeah, why do we have good financial management information? Amanda, to inform decision making. Who else thinks decision making? Oh, here we go. This is like QI. This is Marcus and my bit of fun, yeah. So, I mean, to inform decisions, totally. It's about decision making. But here's the thing: what decisions are you trying to make? Yeah. So it's all well and good, and 98% of people will talk about decision making. So forgive me, Naomi. You know, it's lovely you said that, but let's get some things out in the web chat here that talk about the things that you need to take decisions on. Yeah. So Kath, you're saying that it gives financial control. Yeah, great. You know, so financial control of money and holding people to account for their budgets. I mean, Marcus, you've got other things coming in.
Yeah, we've got improve efficiency, monitor activities or progress, make investment decisions. A great one here from Edith: look at the viability and sustainability of your services or programs.
Yeah, I mean, you know, the one down the bottom here, you know, Alice, you're saying, how much do we need to raise? In other words, you can see the gap that's coming from fundraising, and you can see what you need to, you know, put in place. Yeah. Anybody for anything else? Yeah. Do we have sufficient resources and reserves to continue? Leslie, how do you manage plans? How do you move resources if needed? Brilliant. These are just spot on. So anytime anybody says decision making, I now want you to think, it's the QI moment. It's got to be, what decisions are you actually trying to make? Yeah? Should we go to the next slide, Marcus? Yeah. So 90% of the people in webinars that Marcus and myself have run and workshops in the past, you know, have not been able to say what decisions they're making. If you're an organization, for example, that lives on your portfolio, and this is new grants and contracts coming through, where's your pipeline information? Can you see what's coming down the track? Can you see if you're going to get enough cost recovery? That is the type of thing you need to really take decisions. Yeah, so it's not enough to understand it's for decision making. You've got to articulate what decisions you're trying to make. Yeah. Should we go to the final, if you like, sort of, question or comment before I hand over to Marcus. People ask us regularly, okay, so you've got the information here. What should be in management information? Well, I think there's 4 different things, and it links to a 5th. Yeah, I think you really do need income and expenditure. We put in brackets not SOFA. It's nice if we can get it to align with the statement of practice. In other words, the SORP. But it's not. But this is management information, so it doesn't have to be the same. Yeah. You need something around the balance sheet. You need something around reserves. In other words, talking about the picture of your assets and liabilities. And you also need something around cash flow. Yeah, some people will say no, some people will say yes. But I think the biggest thing that's missing is often the drivers of financial management information. So for example, cats protection, where I used to work, there was never any story about how many cats we'd homed. So we spent all of this money, but we had nothing to show whether it was good value for money or poor value for money. We didn't really understand the drivers of our financial information. As soon as we put a number of cats homed against that, or cats neutered against that figure, we could see whether we were doing well or badly. We understood the drivers of our financial information. So Marcus, it's over to you.
So I was going to do a quick poll then for everyone here to say, how often do you prepare management information? And I'm going to launch poll now and cross my fingers and toes and hope that everything goes okay. And hopefully that should be showing up for all of you now to click how and when you are doing your management information. And this is really interesting to see that almost all of you so far, 81%, are preparing it on a monthly basis. So I'll let it run for a little bit longer, and then I will end poll and share them so that everyone can see. Once I've got a couple more of you who've voted there, and end polling. Perfect. So if I share these results here, you can see that monthly has been far and away the most popular of all of the results just there. But very interestingly, Leslie Hart has just made a comment in the chat saying, but we don't produce all of those reports every month. And that's what this poll was meant to be getting at, is that it's almost a trick question, because there are different layers to management information to what you are trying to reproduce and what you're producing it for. And so it's not necessarily needed for you to be producing all 4 or 5 of these things, if you're including the drivers, every single month. And so we might suggest here that, okay, every quarter you may do a full management information pack, including income, expenditure, including balance sheet, looking at your reserves and making sure that you're picking out the restricted versus unrestricted element of your reserves to know what your free cash reserves really are, that sort of thing. Looking at your cash flow, and most crucially there, with a reforecast to go, okay, we've performed like this over the quarter. What's the turnout going to be for that for the rest of the year off the back of that? But flash figures every month. You don't need to be doing all of this detail necessarily every single month, where you may need to be looking at an income and expenditure on a monthly basis, but you probably don't need to see your balance sheet unless there've been any particular massive jumps or decreases in your creditors or debtors, say. That's not going to be of vital importance to people. Whereas a flash figure of just what are the numbers that really matter to be shown to management, to be, as Mark said, informing their decision making and whatever those decisions may be. And we said there, cash flow when you need it. That we've worked with a wide variety of different organizations, and almost all of them produce cash flows. Whereas interestingly, there was one that Mark and I went to, and we said, oh, okay, it's interesting, you don't produce a cash flow. Why is that? And they said, well, we're a 500,000 turnover organization and we have cash of 1.2 million. We don't need to be preparing a cash flow on a monthly or even quarterly basis, because we know we're fine for cash. And whereas other organizations have been doing it on a weekly or even a daily basis, if cash is really reaching biting point and you're needing to monitor it on a daily or weekly basis just to make sure you have enough to be paying your staff at the end of the month or something like that. And so it's about making sure you are tailoring the frequency of your management information to actually suit the needs of your organization, rather than just blindly producing a whopping great pack every single month. When if you're doing that on a monthly basis, it'd be interesting to see how much of that pack every month gets read. I know, Mark, you have a story about that, don't you?
I've got a sad story about, like, sort of, information and cats protection. Back to where I was there. We had 55 pages in our management accounts produced every month. I had a bet with the management accountant that we could just actually squirrel some of the pages out and, not be noticed. And it was only after the pack was down to 30 pages, so we'd removed roughly half of it. Somebody said, "Oh, it's looking much better now, isn't it?" So actually, sometimes just really focusing the information you need is much more important. A lovely comment in from the chat function there, saying we prepare it every month, we don't circulate it often. Nowadays, technology allows us to do that. Getting a good accounting system and a good accounting package is something we're going to come and talk back later around. Yeah. That's absolutely right.
Yeah. Perfect. So here we're going to start looking at what goes into your management information. And I've started here with a little sort of, again, almost another trick where we've got actual and budget, £35,000 actual and a budget of £50,000. And the rhetorical question here is this good or is this bad? And it's saying, well, we don't actually know what we're talking about here. We've been given no context to it. We don't know whether this is income. And in actual fact, we've brought in less income than we thought we were going to bring in, which is obviously a bad thing. It might be expenditure, and we think, oh, okay, we've actually spent less than we thought. But then, if that's fundraising, for example, if you've spent less than you thought on fundraising, does that mean you're going to be bringing in less down the track? And so, what this is trying to portray is that you need context and you need more to your management information than simply just having some numbers. You need to give it that context. So to click through here, we've got a variance to now say, okay, actual versus budget, what is that difference actually? But simply having a variance like that may not be sufficient. If you had a budget here of £1 million and we were £1 under it, we're going to have a very, very small variance there. Whereas if we had a much smaller figure like this one here, that gap of £15,000 is actually quite a large variance. And so having the percentage variance as well as the figure variance may be useful to bring to light to you certain differences that may look like a small balance, but in the total movement of that balance are actually quite a large one. And then you need to be thinking, okay, well, what does this actually mean? What's the turnout from this? So we're going to then update our assessment for the rest of the year based on that. So our original budget was 50,000. We actually only brought in 35,000. So to reforecast for the next period, we're going to say actually we're going to revise that down, and we're going to say it's going to be 42,500, for example. So this is to say here, as it says there, the cornerstone of good financial management information is having that actual versus budget to give you some context and some comparability, but more is needed to really give it that context and give it that narrative, and that's something we'll be covering in a little bit. This is a more fleshed out version here, so you can now see we have the actual, we have budget, we have our variance, we haven't got a percentage variance because instead we've got some other columns there. So we have an annual forecast where it's been updated. We have an annual budget to show that budget carried forward for the rest of the year, what it originally was and what it's now been forecast to. So here you can see, and we've got a bit of context as well. It tells us what we're actually looking at: fundraising, contract income, grant income, etc. And so this is just again showing you that a slightly fuller picture of some management information, and it's showing as well here that having that annual forecast and having that annual variance compared to budget can be a really valuable thing, because, for example, contract income looks like we are well ahead of budget, but in actual fact, to go into the granularity, you might know, well, I got given a whole bunch of contract money in this period, whereas normally it would arrive in the next period. So in actual fact, my next period is going to look very, very lean. And so because of that, you can see the annual forecast has been revised downward. So having that context, if you took actual versus budget in standalone, you could be forgiven for thinking, great, this looks like a really good picture. Contract income has gone up significantly over what we thought it was going to be. But in actual fact, that's a timing difference. And so you need that forecast and that context to really put those numbers into perspective. Same with expenditure there, where information and advice may have had you had to reset your IT system or something to do with it, and so you've had to spend more than you thought. But actually, for the rest of the forecast, you're not looking to replace anything else, and so it's then a consistent forecast. You just had to revise it for that initial spend you did. So forecasting this is really, really crucial to give you that perspective and clarity on the numbers you're talking about.
Sorry, Marcus, just to go back.
Go for it.
There's a great question from Stephen. And Stephen Ruman says, what are your thoughts on reporting financial year to date against reporting on a rolling annual basis? I think this is really interesting because as civil society and social purpose organizations with contracts typically that span over 1 or 2 years, or even if it's not contracted, with work that takes, for example, 5 or 10 years to make change happen, sometimes we're going to go over year end. I mean, I'm a big advocate of rolling budgets. I've just never seen it done particularly well. And I've seen, especially in the NGO sector, I've seen a number of ERP solutions put in that are supposed to do it, but have just not really delivered, yeah? And yet it's very frustrating for operational teams that are then being wedged into a year. So for example, when Dan and myself were having a good old whinge at each other about fundraising and finance, he was saying, I don't want to be curtailed into a year. So Stephen, I mean, if you've got some great practice or an organization that's doing this well, please share it. I've tried it 2 or 3 times. It's very difficult, but I do believe it's the future. I do believe that it will come. Sorry, Marcus. I just thought that was a really interesting question.
Exactly, and it's one that we've had others here have said as well. Alison has also said, do you suggest using year to date rather than month? Yes, and it may be that for your particular organisation, month is more relevant if you have much potentially shorter timeframes for some of your projects and project deliveries. So I suppose it would be what suits you. Whereas, as Marcus covered there, year to date is one that we think is a very useful measure. This slide here is looking at sort of similar-ish numbers. So you've got your income and expenditure, but we're looking at it from a different perspective here. So we have got some services along the top instead. So we're actually looking at some service contributions here. And this is about management information and fairness or control. So for example, service one here, the budget holder for service one may be they've prepared their budget and they've come in exactly on budget. So they've brought in £100,000 and they said they were going to spend whatever that comes to, £87,000. And so they've made a contribution of almost £13,000. Happy days. However, to try and see the true cost of each of those services, there should or should not be an element of overheads included within the cost of that service, because the overheads are there to support all of the different services in an organization, and they are a crucial part of the infrastructure to enable service delivery, even if they don't link to the services themselves. So by having a finance team, you can prepare your budgets and your management information. By having HR, you can get staff in, you can make sure staff are happy, etc., etc. They're a crucial part of the services, even if they don't link to service delivery. But as you can see here in service one, once you allocate that portion of overheads, that 15,000 into service one, it actually becomes a loss-making service. And so the question here is that fair on budget holders? Where, I put to you, Mark, if you were the budget holder for service one, how would you feel if suddenly a finance person came along and said, oh, well, actually, I've put in 15 grand of overheads. You're a loss-making service now.
Marcus, I would feel absolutely upset and very. I was going to use a rude word, but I won't.
I was going to say you'd probably have used sterner language than that. And so it's a really tricky thing here about what is fair on budget holders. But it's also worth saying, well, if you're not including those overheads into services, then the money to pay for those overheads has to come from somewhere. And if you're not including that in the true cost of your different services, then where's that money going to come from? Likely from your free reserves, or hopefully from a fundraising sort of unrestricted pot that you have potentially lying around behind the sofa. So I think part of this is to say that there is a culture aspects to management information here, and that it's really important that the budget holders really understand what's going on here in terms of the management information, and to understand why they're having some overheads put into their services, the basis that those overheads are being allocated in. And if that's done from the start in a transparent manner, then that means that the budget holder for service one could take that into account. So instead could know that they're having to aim towards just over 100,000 rather than aiming towards 87,000 instead. And can potentially adjust their prices or look to do increased fundraising, or increase the number of hours that they're selling, for example. And so I think it's what we're trying to say here is that it is potentially fair on budget holders, but depending on the manner in which you do it. And it's about being transparent with them and taking them on that journey and developing that understanding with budget holders as to why overheads exist and how they need to be paid for. Because if they're not coming from services, then they're coming from your unrestricted.
And I mean, Marcus, the bottom line is if people are communicating and finance and, let's say the budget holders are really working well together, there's no problem, because the communication will say, right, I understand and I'm being held accountable, let's say for the contribution line. Actually the allocation of overheads is there for a different purpose, but I've seen so many arguments in so many organizations around this. This element of control and getting it right is really important.
So one thing we haven't covered with all of these different numbers that we've looked at, to go back to this slide here, we haven't got any narrative or any context. And I mean, in my opinion, I think having that narrative or having that context is one of the most important bits of your management information, because it's also the chance where non-finance members get involved in the preparation of management information. Because to go back to the earlier example I had, where contract income looks like it was up actual versus budget, but in actual fact you had a kind of a period reporting end timing difference of a bunch of income there. Unless you're talking to the budget holders and the people who are actually dealing with that service, you're not going to have that understanding. And so the narrative or commentary that you're getting there is not going to capture that level of understanding to let you know, well, actually, it may look great in the first half of the year, but in the second half of the year, it's going to be very lean because we got that initial slug of money, but we're not going to receive it throughout the rest of the year. So what I've said here is it's the so what to the figures. Income is up, so what? Our reserves have fallen, so what? And as I said, you can only get that information, that so what, from the budget holders who really understand what's going on there. Finance cannot do this alone. And getting involved, those people who are held accountable for budgets, is something that I don't see very often in terms of the preparation of management information. Quite often I see that it's the CEO who's adding that narrative, but then the CEO themselves is having to go to the budget holders to try and get that information, whereas the budget holders themselves aren't actively involved. They're done through a sort of one step removed process here. And so having that involvement from budget holders also gives a sense of ownership of the management information, that it's not just prepared by finance alone, it's prepared in collaboration with the rest of the organization. It really helps, as Mark said before, that communication piece between finance and budget holders. And we spoke earlier about the drivers of measuring what really drives your organization and what matters to your organization. So it's all well and good having just a bunch of numbers of your income and expenditure, or looking at your balance sheet, but are you capturing what really matters? So here the number of cats homed, if you're working at Cats Protection, are you measuring that? The number of service users that you're reaching or that you're helping? What is your pipeline of grants and contracts coming forward? Do you have enough grants and contracts coming up to be paying for your overheads, or do you need to be looking at something else to be funding those overheads? What is your overhead recovery percentage on those grants and contracts? Are you achieving a static percentage across all of them, or are you tailoring them based on who your different funders are? looking at your different activities or cost centers, where so often we see management information prepared on a cost center basis, and you're looking at salaries and going, okay, well, salaries have gone up or down, but you're not looking at it from a services or an activities um, lens. So you're not seeing, to go back to that previous example, service one, you're not seeing whether service one is making a contribution or a surplus or a deficit. You're not seeing whether your information and advice service is running at a surplus and things like that. And so it's about trying to make sure that you're measuring what matters. Because it's all well and good just having a whole bunch of numbers, but if none of it actually matters to your organization, just measuring your salaries and saying, oh, salaries have moved by 2%, is probably not going to be an earth-shattering revelation in your management information. Whereas being able to say, actually, our pipeline of grants coming up is not enough to pay for our overheads. Here's our pipeline, here are our overheads. We've got to close that gap somehow. We've got to go out there and look for more funders. And something like that can be really, really useful to an organization.
So Marcus, here we go.
Yes.
We're onto the bit where we've got some engagement. So do you want to flick onto the next slide?
Absolutely. Yeah.
Yep. And so this is the bit where we're gonna see if it's gonna work, and we're just gonna be really messy here. We're just gonna open it up to people to talk, and also people to give us some comments in the chat. We're gonna have 5 minutes here. So who would like to talk, and who wants to pop some stuff into the chat that we can ask? I mean, things that we've talked about so far, do you agree? Do you disagree? What other good practice have you seen? What tips do you have for us? Over to you guys.
Yeah, and equally, if you have a burning desire to talk, raise your hand and we can always unmute you and give you the opportunity to actually speak your mind rather than type it, if that's what you're more comfortable with.
And nobody ever puts up their hands to speak. It's just one of those things. So I was going to say, send all budget holders on an Excel course. So Sophia, absolutely, yeah. Do people that can't do pivot tables and for example, sort and filter, yeah, we need to send them all on courses. Sophia, I'm with you. Yeah.
Yeah, it's an interesting point where we worked at an organisation previously where their all of their budget holders were very much service delivery experts in that particular field, but they weren't finance experts in any way, shape, or form, and yet they are having to prepare the budgets in that organisation with almost no input from finance. And you're right, they may be excellent at what they do, but if they're not a Excel wizard or a finance expert, there's potentially a need for some training there that could also help break down those barriers between finance and budget holders if finance are able to deliver some training and help them increase their understanding and learning.
Kath, I think Kath's raised a great point here. She says, ask the readers of the information what they need. In my experience, when the readers of the information are quite sophisticated, they will give you an answer. In the case of others, they won't be able to answer that. But you've got to try. And then when you give somebody something different, they'll say, "Oh, great! I didn't realize you could get that. I'd like that more." And then you're engaged in that conversation. I mean, for me, it's like gold dust, because suddenly you've got a wonderful conversation between finance and other people. So I think, Kath, just getting something out there that's good enough, trying, and then seeing how you can work that into something better that really meets people's needs, I think that's incredibly important. I think that's a great comment from you, so thank you.
Yeah, we've got Addy, who said, we're a small volunteer-led organisation. Money coming in and out has basically not changed for months apart from the odd donor. Do we still need to produce management information as regularly as every 3 to 6 months? What do you think on that, Mark? I'd say that it's worth still having that picture to give you an idea of where it is you're going, even if you're just preparing a high level to say, yeah, things are still looking pretty steady. It's very easy to get out of the habit of preparing management information, and then as things start to change, you're not necessarily getting back into that of having information. It's good to have the consistency of knowing that, yes, over the past however many months, things have been very stable, even if it's just an affirmation to you.
I mean, there's another side to this, which is actually getting the if you like, the transaction processing into the system. For me, the bigger thing here is getting the information into the system, And then the thing about pressing the button, the information should come out automatically. We shouldn't have to do huge amounts of work on spreadsheets, yeah. But I know on average, the average finance function has 17 spreadsheets to do their month-end close. So that's a crazy number of spreadsheets, yeah. So I think there's something about the due diligence of getting your processing done, pressing the button and getting the information out there. Just to answer Marie's pipeline, comment. Probability is finger in the air exercise. I think it's really interesting, Marie. I've seen so many different ways of doing this, and you tend to have anything over 80% probability as you include, anything under like 80 to 50%, let's say you accrue 50% of the income, anything under that. And when you're talking about something like legacies, Cats Protection, back to good old Cats Protection again, they used to have £35 million worth of legacies. How do you budget for legacies? Well, you just have to do some proper statistical analysis and take your best guess. Yep. Over to you, Marcus. Any other comments?
We have a very interesting one here from Colin Gage saying the basis of allocation of overheads is often a controversial subject and may be objected to by individual budget holders. Any tips? I think this comes down, in my opinion, down to, again, communication of, I think, you have to be fair in terms of your allocation of overheads. It's not necessarily fair to lump all of it into one particular service just because that's your most profitable service, say. But that communicating with them to achieve a method of allocation that is seen as fair by the parties, whether you do it on headcount. But then you could argue that one particular one uses a lot of volunteers and so it takes up a lot of time. And so it's about trying to find one that works for you. Even if that's taken as saying, okay, the size of your different services based on direct expenditure. You could say, therefore, the bigger the direct expenditure of one of the particular services, likely to be the more time HR or finance or someone are spending dealing with those, even if it's just in terms of inputting data for finance into the system. And so trying to find one that works. Or equally, you may have a very large expenditure, but it's only done in terms of 2 pass-through funds that you do to a subcontractor. And so to use that may not be fair. So it's trying to find the method that you think is fairest for all of your different services based on the uniqueness of your organization and the types of services that you have.
So I'm going to do 2 final very quick answers to questions, and then shall we move on, Marcus?
Sure.
You're happy with that?
Yep.
I mean, Andy, you asked a great question about, an accounting package that can help me, an online accounting package that can help me. There is a revolution going on in accounting packages. And a revolution is happening because they're moving from packages which are modular based and you press the button and it fires all the information and you have a month-end close process, which, if you like, is a modular system, into things now where it's artificial intelligence and you'll handle the paperwork as it comes through and you can tell the system what to do and it can produce your management information from that very, very easily. I'm talking about Xero. Yeah, so Xero is an app-based finance product that is just eating the market. It's not quite good enough, in my opinion, yet, because it's not particularly strong with restricted and unrestricted. But like you have apps on your mobile phone, they're building new ways of doing things all the time. I think that Xero will be a serious contender for the future for most charities as it grows and as it develops. The other thing was Caroline just said, are you going to cover anything to do with worst case scenarios and COVID related shock-based changes? I think it's a really good question. Yeah. And where we are at the moment with COVID-19, I think that you may need to produce 2 forecasts or reforecasts, or maybe even 3. In other words, you might need to say, I'm going to have an upside case, I'm going to have a downside case, and I'm going to have what I expect. And then you can see from that what might actually play out as implications during the year. I think it's also very difficult when you've got reserves and you're bumping along and maybe just starting to go insolvent. Yeah, that's when you need to call in help and get somebody to actually give you guidance, what type of basis you would do that on. Now, as an accountant, the going concern question is, can you look forward 12 months? Yeah, I don't want to get into that now, but the question then is, can you look forward 12 months? So I think in worst case scenarios, you not only need to be doing for the year, you need to be looking forward 12 months as well, to see if you are going to be able to survive. So Caroline, I hope that helps.
Yeah.
Marcus, any final thoughts there, or we need to move on?
I just noticed that Kim, you had your hand up and then lowered it, and I'm sorry we missed you just then.
No,
if you
go
still want
for
to
it.
talk towards the end, let's come back when we get to the questions. Oh no, oh yeah, go for it, Kim. Your hand just popped up again. There we go. If I've allowed you to talk, you should be able to unmute yourself, and then you can talk.
Yeah, that's great. Thanks. It was really just on the topic of the overheads. You started covering it in your answer, so I put my hand down. But interesting what you said about the overheads by expenditure, because we haven't tried that. So we have about 20 establishments, and we started applying the overheads by income or by establishment numbers, so whether that be the service users or service users and staff combined. There isn't one method that works for everybody, like you said. However, one method actually really helps one part of the service and another one really disadvantages them. So there isn't a straightforward answer, which I think is what you pretty much alluded to, that some people will be winners and some will be losers.
Yeah. But they're trying to have that transparency with them to understand that that's the case, or that ideally no sides are perfectly happy, because that means that you've probably achieved a fairly fair outcome in that. But as you say, if you've got one side is massively helped and one side's massively hindered, then I accept that that's never going to be a perfect scenario.
So Kim, we planted you in the audience to say that. That's been lovely. Thank you. And also, you're absolutely right. Yeah. And don't forget that the donors sometimes have rules where, for example, under the EC rules, you have to do it on a headcount-based apportionment. I know that might not be such a thing in the future, but it's still very important. Kim, thank you. I'm going to have to move on, but hopefully we'll have a chat with other people later. Yeah. Marcus, let's hit the final couple of slides, and then we can just go back to a quick conversation.
We have a very quick poll then, once again, for people to say, if I launch polling, how long after the period end does it take you to produce your management information? So we've covered how often you're all doing it, and most of you are doing it on a monthly basis, but how long does it actually take you to get those reports out and get them ready in front of the management information users? So we've had a good number of you answering so far. I'll give a couple more seconds just to make sure that as many of you as possible have had a chance to answer this, and we'll end polling there. Perfect. So over to you, Mark, then.
It's really interesting, because I am one of these people that like to go across to the commercial sector, nix something, run back to the charity sector and implement it, and then nix something from the charity sector, run back to the commercial sector and then implement it there. So the interesting thing for me is between 1 and 2 weeks, between 2 and 4 weeks. So if you take that as the average, the commercial sector is looking to close within 5 working days. Yeah. So the commercial sector and good commercial practice would say less than 1 week is the close, because then you can get on and start using the information for decision making. Back to that buzzword that we started earlier on. Yeah. Marcus, if you can just pop up the detail. This is what I've learned from working in the commercial sector. They have this this focus on fast close, and it's about being good enough to be able to press the button and get information out that works. A simple example is around credit cards. I've worked with one NGO who struggled to get credit cards into the system. And when I asked them, I said, how much are credit cards? They said, well, it's £12,000. And I'm saying, well, how much is your spend? Well, it's just under £1 million. But that was holding them up for 3 weeks. Yeah. So what you can do is you can make an accrual into the system, £12,000 for credit cards, press the button, get your information out. Yeah. And then come back to fill in the detail, for example, around credit cards. So the big thing I've learned about fast close is it doesn't have to be 100% accurate. But if you don't get it accurate enough, people won't trust the numbers. So trying to get this fast close balance right is really important. I mean, second thing, if it's got non-financials, if it needs to be good enough for, you to take decisions about the business, yeah. So for example, cash flow, you may have to spend a little bit more time. But back to Stephen's really good point, do we have good enough reporting tools to be able to do this? Quite often it's the thing that hinders. And we're using Excel, where actually if we plugged in, for example, some type of reporting software, I used to use Crystal Reports, it takes the effort out. It takes a long time to set up the reports. I've used Envision as well, but once you've actually got the report set up, you just have to press the button and it comes out. And there's wonderful tools like Tableau now, and all sorts of other reporting software that can help you, for example, with fundraising. If you go to the next slide, Marcus, yeah, it then comes down to the question, about, budgets and budget setting, which is where we started the whole presentation, yeah. I mean, budgets really should be realistic, or achievable, but sometimes they need to be motivational, for example, for fundraising staff. Sometimes you want to set stretch targets. Using your forecast to actually sort of motivate people can be quite powerful. Getting service leads, getting program information, which is aside from finance, working very closely between finance and operational teams, for example, is very important. I used to get my staff to go and sit in operations or fundraising or advocacy, wherever it was, just to get them out to go and understand the business. Yeah. Budgets need to be monitored, updated periodically. I'm really, really, focused on looking forward. And that means good reforecasting, and at least every quarter. And also what is included in your budgets. With COVID-19, with the world we're in at the moment, we really do need to know what's in them. So if we need to cut or hold back, we know, for example, where there is that spare capacity to do that. But the problem is, if you just turn off fundraising, as most organizations tend to do, then you put yourself in a worse place because you've cut off the new money for the future. So getting to know what's in the budgets and understanding this water, that what you actually do is, make a change here and it moves the organization in a different way. Really understanding those dynamics is key. One final slide before we summarize. Oh yeah, who sets your budgets? Who monitors your budgets? What about the variances? Let's go to the next page, Marcus. Yeah, because this is I think where we need to be in the conversations around COVID-19 and the environment we find ourselves at the moment. I asked Marcus, could you find like Dennis the Menace or Gnasher or like sort of the Tasmanian Devil so we could have a pair of teeth, and he just put up some false teeth here. And the question for me is, who holds budget holders to account and how are they held to account? Yeah. Is it finance? Is it the CEO? But quite often we find it's no one. Yeah. In other words, nobody's asking the hard, pithy question, who have you overspent? Why? What's going on? Are you going to be able to rein that back? Or, for example, fundraising budgets, they're so fluid at the moment. What's the upside? What's the downside? How can we get this information to be able to plan? Yeah. So I think having this conversation, but not just about having teeth, about having a two-way dialogue, is really, really important, and holding people to account, but also listening to what they've got to say at the moment. And that's the key dynamic I'm finding, is that people are hearing, but they're not really listening to the implications, yeah? And therefore they're not getting the best quality out of the information they're producing. That's kind of everything we had to say. Marcus has got a summary slide, and then we're going to open it back up to people to talk. Davina, our budget holders have to explain their material variances. Absolutely. I think that's the minimum we should expect. And it might be to finance, it might then be to somebody else within the organization. Yeah.
Yeah.
Marcus, do you want to hit
Perfect.
the final summary slide, and then we'll just have 5-10 minutes, just conversation. Yeah.
Yeah. So to give a quick rundown here, we've talked about actual versus budget and how they're the building blocks of good financial management information, but that they alone are not necessarily enough. They are what you then, as it says, building blocks. They're what you build upon to then give your variance, give your percentage variance, make your reforecast, generate your narrative around to really give some context to those numbers and bring them to life so that you're asking the so what questions about them. We've talked about reforecast and how critical they are, particularly at the moment where things have been so fluid, often not in a necessarily positive way. And having those reforecasts, particularly maybe about your cash flow, to look at what is coming down the track, and using that to basis your decisions on, or do you need to be changing anything in the future to be preparing for what's coming up ahead? The drivers, are you measuring what matters within your organizations? Are you measuring the number of cats that you're actually rehoming as an organization, or are you just talking about the numbers? Fast close, how getting it looked like there we had 18% of you are preparing your management information in less than a week. So that means that the remaining 82% of you are preparing your management information in over a week, sometimes as many as over 4 weeks. Fast close is making sure you're getting that useful management information as quickly as possible in front of the users, so that you have fresh numbers, rather than getting, particularly at the moment where things are so fluid and dynamic, receiving numbers that are already a month old. The situation may have already moved on considerably since then, and so any understanding you're trying to generate from those numbers may already be out of date and maybe not as useful as they could be. Having teeth, making sure that someone is able to hold budget holders to account for any variances, whether that be finance, whether that be the CEO, whether that be a program director or whoever, so that those variances are actually held to account, rather than it simply being, if someone had massively overspent, there's no real consequence to it and they can continue to do so next year. But because it may also be a situation that lets you see that actually they're simply not very good at budgeting, and this comes back to the training aspect, where you may need to do some training with your budget holders so that their budgets in future are more accurate, rather than not being held to account for the accuracy of those budgets. And so that, in a very quick 53 minutes, is a run through of management information from us. So what we're going to do then is, before the end of the webinar, is open back up for questions. And we've had a few people who are saying, will the slides be sent out? Please send us the slides. I can confirm the slides will be going out in a follow-up email to all of you, even those who didn't manage to attend the webinar. So fear not. And there'll be a recording of this as well going out, so you can watch it back as well and hear Mark and I's dulcet tones back at you, as well as the slides.
And all those cat stories.
All those cat stories.
Marcus, can you just go forward 2 slides, please, while people get ready
Yes.
to put their comments into the chat, please, if you can get some chats there, and also if you can build up bravery enough to actually come and talk, we'll give you a chance. We will respect people, and we'll stop exactly at 5 o'clock. As part of our commitment to the sector, what my team have been doing and MKS have been doing is doing regular webinars. You can see here all of the different webinars that we've been doing. So fundraising, impact, full cost recovery. We've got lots coming up. Yeah. So you can see the 10th of September, 24th of September. Please come and get involved in these as well. Lots coming up. Stay connected. Back to the previous slide, Marcus. Let's open up for anybody who wants to come on and make a comment, if you can.
We have one from Jean, which was actually from earlier that we didn't get round to, which was, where does allocation of overheads come into ROIs, return on investments? We have great debates on this. Jean, if you want to be unmuted, we can have a discussion. You can tell us about these debates that you've been having and where you stand on this. Alternatively, feel free not to, and Mark and I can just talk at you some more.
Or anybody else who wants to come and join us in a conversation, please.
Jean, if you're happy to talk, if you raise your hand on the participant panel.
Yeah,
If not, we
So Aid says, out of interest, is there a place for best value in management information? I've not seen that, Aid. I mean, you know, what Marcus and myself have done is we've worked up a pro forma, which we can have a look at sharing. But I mean, it's going to be very focused on, for example, the NGO community. You know, so we can put out, for example, you know, an idea of you know, reasonable practice, but it's going to look very different for all organizations. We'd be a little bit worried about doing that, but I you know, this is the problem. I just don't see a lot of people sharing, you know, best value in management information. That's why we put this out. Karina, we've been
you're
asked
now
to...
unmuted. I was going to say Jean
Oh,
is happy
Jean's
to talk,
on, yes.
and you're unmuted. So Jean, hi.
Go.
Hi. Yeah, for us, at the month end, it's always a discussion about return on investment, and most of them think that when we look at the return on investment as compared to what the IOF normally puts out as what the average return should be, they don't think that we should take into account salaries or any allocated costs. And so we have great debates saying, well, how is that really accurate if you don't want to take on board your salaries, which are direct costs, or, you know, the time that the CEO puts into any fundraising activities, or the time that finance puts into it, or the database team. So that's why I put that question: how does it all come out?
I'd say in there that also sort of slightly ties into the last slide we had of having teeth, where it sounds to me there like you have fundraising very much being in the driving seat of reporting that return on investment and producing that information, where there's not necessarily the accountability, perhaps, or correct me if I'm wrong, of saying, well actually these costs need to be included because XYZ, and it's not about the fundraising team trying to get themselves the highest possible return on investment they can. It's about trying to get the most accurate one that you can, so that those who are actually basing decisions off that are using relevant and accurate data.
I was going to say, Jean,
yeah, I believe so. And I think the confusion is because when they all look at the Institute of Fundraising ROIs, they're not sure whether these are included as part of those ROIs. And the argument is it included in the IOF ROIs or is it not? And I'm saying it is, but I don't know.
So Jean, I was going to say, it's lovely to talk to you. You know, it's just a pleasure to have you, you know, on the call and having a chat. I mean, it's interesting how Australia and Canada are starting to move towards much more systemic ways of accounting for fundraising and fundraising metrics. And what I've seen is that they tend to remove overheads, yeah, as part of that metric. Now, personally, I think we should include overheads in that. I think we have to have the full cost, because otherwise you're not looking at, you know, the real cost of delivering it. Yeah, so I think it's a difficult question, but I think it's being driven from the benchmark perspective,
yeah,
rather than anything else. Jean,
okay,
does that kind of make sense?
Yes, it does. Yeah, that's fine. Yeah. Mm-hmm.
Cool. And lovely to talk to you, Jean. Any final comments? We've got 1 minute really left.
I was going to say there's a very interesting one quickly from Karina, saying, have been asked to produce management information reporting which includes performance metrics and impact as well as the financials, and goes on to say, have you seen examples that can be incorporated into the management information and be reported cohesively, i.e. like an organizational dashboard? And that's a very interesting question, Karina, because we had a whole section in this presentation based on dashboards within management information, and we decided it was such a big section, we might even have to do a whole session just on those alone.
So Karina, I talked with you at CAS. You know that the next part of this presentation goes into dashboards, so I think it's being a little bit devious as well. Karina, we're happy to talk about dashboards, but yes, there is that as well. So that makes me smile, and she's just put hurrah. So we'll make that the next finance, you know, talk that we do. I mean, you know, I'm happy to talk about dashboards. I'm just going to say from myself, I'll give Marcus the final word, but I'm just going to say myself, thank you for engaging. We're going to respect people. We'll finish at 5. But just thank you very much indeed. Fill in the feedback form when you get that, please. And just thank you for the thanks you've given us in terms of the session today. I mean, Marcus, final word.
No, thank you so much for such great input. We've had a lot of really insightful and enlightening comments and questions, and it's been just a real pleasure. And I'd add to Mark's thing about the feedback. If there's anything that you want us to be including or talking about that we haven't covered yet in any of our previous webinars, please do let us know, such as Karina there saying she wants to talk about dashboards and it's something that we'll cover in a future session. We can hopefully do the same for something that you want, because ultimately we want these to be useful to you as the viewers and participants. So the more relevant we can make them, the better. So all that's left is for me to say thank you very much and enjoy the rest of your Thursday. Thank you. Bye.